Welcome everybody to our next video. We're going to go over the terrifying reason why gold just surged past $3,000 per ounce. So go ahead and type 1 in the chat if you can hear me well, and we're going to get straight into this report. What's going on in the stock market, what's happening with the US government debt, why the markets are so worried, why the dollar is falling so much, because a lot is happening right now, and we definitely need to pay attention to what's happening and how we can protect ourselves. So thanks everyone for those ones in the chat, and let's go ahead and get into this video. So I'll go ahead and bring up this right now. So 1 second, I'll just change my screen here. S&P 500 closes in correction territory Thursday as stocks tumble again on Trump tariff threats. Now, people, even if there was no tariff threats, the S&P 500 and the NASDAQ has been severely overvalued. There's been this AI craze that has been happening right now. It reminds me of what happened during the .com bubble, when all these companies just put .com in their bio in their company, or put .com at the end of their company name, or put com as their ticker. Their stock surged. What's happened over the past 2 years, we've had a lot of companies just say AI or put AI somehow in their business model, and their stocks have been soaring. But like all new technology that will change the world, it will be revolutionary like the internet. It doesn't mean you just pay whatever price for that stock. And it doesn't mean every single company is going to win. A lot of companies failed during the .com bust, and a lot of these AI companies that are starting right now are going to be failing. So again, even without the tariff threats, that will be the big risk. But we do have these tariff threats. We do have big geopolitical risks that are mounting up. And also inflation is surging again, which creates a lot of uncertainty for the markets. Because it's not bad news that the stock market knows is coming that causes crashes. It's bad news or uncertainty. It's when the markets don't know exactly how this tariff trade war is going to play out. They sell first and ask questions later. So if we can look at stocks like Tesla, for example, I'll go ahead and bring it up here. We can see it is down 50% from its all-time high. It actually fell even more before Donald Trump had to pull up in his whip in his new Tesla and flex it out in front of the White House, which is pretty funny, but it's good, good on him for supporting Elon. They're supporting him. But we've seen stocks like that, Nvidia, which has been a big buzz stock that surged about 1,200% on the chips craze, on the AI craze. That is now down over 20% in bear market territory. So even though we're seeing 10% drop in the S&P 500, it's really been the big Magnificent Seven that have been severely overvalued in the stock market. Now it says here, the NASDAQ was already well into correction territory heading into Thursday's session, now sits more than 14% below its recent record. And I think the NASDAQ is going to fall into bear market territory in a matter of a month. The Russell 2000 is approaching the bear market territory already now. A correction is when stocks fall 10%. A bear market is when the indexes fall more than 20%. So the Russell 2000 is fast approaching that. Now we can see here, Trump took to his True Social platform Thursday morning, threatening, this just came out today, an additional 200% tariffs on all alcoholic products coming from countries in the European Union in retaliation for the bloc's 50% tariff on whiskey. So first it was Canada, Mexico, and China, but now they're even going after their allies in the EU. They've even put steel, aluminium tariffs on Australia. So these tariff wars are going to really heat up. And a lot of people saying that, look, this won't affect inflation, it won't affect these companies at all. Look, there's only two outcomes. Either these companies increase their price, or they absorb the cost and their profits go down. And if their profits go down, their stock has to go down. So there's no winner besides the governments that take in this extra revenue. This will be great for wine and champagne business in the US, he wrote. Trump later remarked that he wouldn't be changing his mind on a broader range of tariffs set to be implemented on April 2nd. Now, a lot of reason why the stock markets have been selling off as well, again, like I said earlier, is uncertainty. He said he's going to be doing it. He won't be doing it. He'll do a tariff there. He'll do a tariff here. He'll do a tariff everywhere. And again, the markets don't like uncertainty, so they're like, okay, we'll take our profits. Stocks have been surging to crazy, unsustainable levels. We'll take some profits and see how this tariff war plays out. But what a lot of people are really worried about, and what a lot of people, other people aren't even seeing, is what's happening with the US debt. The reason Trump is doing this is because the US government is facing bankruptcy. And I know we've all heard this before, but people, it has gotten far, far worse over the past 4 years. And just have a look at this. So the US budget deficit surged in February, passing $1 trillion for a year-to-date record. So what I'm about to show you is, just like any company, if you're taking on twice the amount of debt as income you're earning, it's only a matter of time before you default and go bankrupt. And it's no difference with the government. So net cost to finance the 36.2 trillion national debt, it seems like every time I read this, every month it's another 1 trillion on there, lowered to 74 billion for the month. However, total net interest payments year to date rose nearly 400 billion, just behind the national defense, health, social security, and Medicare, the largest costs in the US budget. So that's right, the interest, just servicing it, not even paying down the debt, is going to become the biggest expense for the US government. And that is why Trump is going to try so hard for the Federal Reserve to cut interest rates to zero, because if they don't cut interest rates to zero, the US government is going to default very, very soon. It's just simple math. Anybody can figure it out. Any business running this balance sheet would fail immediately, but they've just been extending and pretending with the debt. But again, there's no easy way out of this. If the Federal Reserve lowers interest rates to zero, when we've just got recent data that's saying inflation is surging again, well, we're going to see your money be devalued, and that is why people are rushing into gold right now, because they know that this is the end of the empire. They have looked through history, and Ray Dalio has recently come out and spoken about the great debt crisis the US is facing, and said all empires throughout history that are doing exactly what the US government has done right now has failed. So let's finish off here. For this section, we got a new section to go over. So for the year, the deficit totaled 1.15 trillion through the first 5 months of the fiscal 2025. The total is about 318 billion more than the same span in 2024, or roughly 38% higher, and set a record for the month. So look at this. This is crazy. It's up 38% in a year. Can you see how the debt, the snowball is rolling down the mountain, and it's picking up speed, and it's getting bigger and bigger and bigger? You know, Warren Buffett says compound interest is, the eighth wonder of the world. Either you earn it or you pay it. And right now, the US government is paying it. And this has led Ray Dalio to come out with this latest warning. So he warns that the mounting US debt problems could lead to shocking developments. So what are those developments? So the US deficit needs to go from a projected 7.2% of gross domestic product to about 3% of GDP. But again, there's consequences for everything. If they do that, the economy is going to tank. That's a big deal. You're going to see shocking developments in terms of how that's going to be dealt with. Again, the shocking developments would be the US economy crashing. Asked whether the US debt problem could lead to a period of austerity, Dalio said the issue could result in restructuring the debt, the US applying pressure on other countries to buy the debt, or even cutting off payments to some creditor countries. And I think this is the early stages of what we're starting to see now with the trade wars. It may lead to financial sanctions, or just saying, look, we're not going to repay you on this debt. And it could lead to much worse things. So just as we are seeing political and geopolitical shifts that seem unimaginable to most people, if you look at history, you will see these things repeating over and over again. And that's why we all need to learn from history. Remember, it wasn't too long ago that Great Britain was the biggest empire in the world before they fell. So you cannot get complacent and think, well, the US will never fall. We've recovered after every crash. No matter what happens, we can spend as much as we want. We'll never fail. It's that complacency that leads to empires falling. He said, we'll be surprised by some of the developments that will seem equally shocking as those developments that we have seen. And those developments, like I'm talking about, is the US government defaulting on the debt and the economy falling into depression. Now, another reason why gold is surging right now is a dim outlook for the US dollar. People's purchasing power getting diminished. They know that the Federal Reserve is going to have to lower interest rates, which will weaken the dollar. They know they're going to cover up the inflation and the money printing that's going to make the US dollar worth less, and that's going to lead to gold surging. Because look at this. This is a historic moment right now, guys. Gold futures has topped $3,000 for the first time ever. So again, some people say I'm all doom and gloom, don't teach people how to make money, or they wouldn't make money listening to me. Well, if you listen to, what I've been saying for the past 2 years, buy gold, and I was saying to buy Bitcoin, even though Bitcoin has crashed or not crashed, it's corrected from 110,000 to 80,000. I was telling people to buy it around 25, 30,000. I didn't time the bottom by saying getting it, 16, 17,000. But again, nobody can time the bottom. You just got to get in a good range. So people who have bought gold and Bitcoin over the past couple of years have made huge profits. And again, I bring up the DXY here. The reason why Morgan Stanley was put out this report, because the DXY, which is the US dollar index, has fallen from about 110 to 103. So we can see the dollar is weakening. So put very, very simply, what this means is stocks have been overvalued. They don't know what this trade war is going to lead to. I think it's going to lead to very, very big consequences coming. A lot of countries are going to become more nationalistic, more protectionistic. It's the end of globalization, which could be a good thing. So stocks are selling off. People are very, very worried about the US government debt. If they keep on this path, the US government will default. They will become bankrupt, or they're going to have to cut things like Social Security and things like that people really, really need. And there's no easy way around it. The dollar is falling, and that's why central banks and big money is getting into gold. So what do you guys all think about this? Let me know down below. You're all awesome. I'll see you all in the next video.